Okay, so in this video we're going to be going over the use of support and resistance lines. They're used heavily when determining the buy, sell, or entry and exit points of your position. A support line is essentially just a price level that the stock is expected not to break below, whereas a resistance line is a price level that the stock is expected not to break above. And so many times we hear the word support line or support level used interchangeably, but they're the same thing. So being able to draw support and resistance lines is huge because it helps us not only create a zone, but it also helps us determine our entry or our buy points along with our sell or exit points. So right now I have ticker symbol BCRX pulled up right here for BioCryst Pharmaceuticals, and this is the 1 year, 1 day chart. And I'm using my TD Ameritrade Thinkorswim platform. So what we're going to do to begin is we're going to scroll down here and we're going to find our drawing tools. And we're going to select our trend line tool right here, and we're going to draw our support line. So let's find the bottom right here. Let's work our way up, just like this. And so that's our support level, or support line. So what I want you to notice is that these candles that represent the price of BCRX don't really dip below this level. They kind of hit this level and they bounce back off. Now, of course, we have some outliers. For example, here, right here, the wick kind of goes below the support. So these are outliers that did end up going a little bit below support, but as we see here, it still bounced back up and corrected itself. So now let's draw our resistance lines. So we're going to go right from the top. Let's work our way up, just like that. And of course, it's not perfect either. We see our outliers here, where the candles still break above the resistance, but it did correct itself as we see and came back down. So this is our zone that we would trade BCRX within. So we'd essentially buy here, sell here, buy here, sell here, and so on. So let's just use this part right here as an example. If we were to buy in right here, sell right here at support, that would be a 32% profit, 32% increase in price. So if we put $100 in, we would have got $132 out. That's a $32 profit. Let's try right here. If we bought in right here, sold at our resistance right here, that would be a 41% profit. So that's definitely pretty nice. It's a good profit margin. So essentially what we want to focus on, or what I kind of want to emphasize, is that this support level tells us where to buy, because it tells us that based off just the historical price movement of BCRX, this is the lowest the price will get. So if this is the lowest the price of BCRX will get, that tells us that this is the best possible price to buy it. This is where we're getting the best deal. And of course, you want to get the best deal, because like the fundamentals of trading is to buy low and sell high. So here we know we're getting the best deal. We're buying at the lowest. And for resistance, we know that we're selling at the highest. We're maximizing our profits. So it tells us where to buy, and it tells us where to sell to be most profitable. And so let's say we got greedy and didn't pay attention to our resistance line. Look at this big red candle that would have hit us. Now, of course, that wouldn't make us lose money, but we lose profits. So we wouldn't lose our initial investment, but rather than making, say, 40% profits, if we were to hold and be greedy and hold past this resistance, we would have only made, let's see, 25% profit, which isn't bad at all, but it's definitely not 40%. So now I'm going to show you another stock. The ticker symbol is SWN. All right, here's SWN, and let's zoom in a little bit. So we're just going to focus on this part of the stock right here. And let's go ahead and draw our support and resistance levels. So that's our support. We see that the candles kind of obey this line right here and keep bouncing off of it. And now let's draw our resistance. So there we have our resistance. Of course, we have our outliers again right here and here, where the price did go a little bit above the resistance line. So this is our interval. This is what we trade within. So we'd buy here, sell here, buy here, sell here. And just this particular example, this would have been a 23% profit. Yeah, 23% profit. So it's definitely not bad either. But so what I want you to focus on, so what I really want you to focus on is this ugly part right here, this eyesore, right? So we see SWN hit support, and that probably means we want to buy in, and we'd sell somewhere up here for, let's see, for 28% profit. So let's say we did buy right here. The trade would have went south very quickly because it broke support. That's a change in pattern. So we also understand that some of the psychology behind that is that a lot of investors would have seen that this broke support, and that would have definitely worried them and freaked them out, and that would definitely contribute to the sell-off. Now, this break in support could be a number of different things. Sometimes it could be an earnings call gone wrong, a bad earnings report. It could be some bad news that came out, a regular volume. It has to do with a lot of different things. And it could always be a different thing. It's a case-by-case basis. So what I really want to emphasize is how we could have used this support level for risk management. So I'm going to introduce a stop loss to this stock. So a stop loss is essentially just a price level that you decide you're going to sell your position at. So it's where you're going to decide to cut your losses. A lot of times it's because you no longer see profit potential, or you no longer understand the pattern that the stock is trading. So if you don't understand the pattern of a stock, why would you keep your money in that stock? It's a gamble at that point, you know? So we saw this break in pattern. And so knowing that my support is right here, I would set a strict stop loss at maybe 5%. So I'm only risking losing 5% of my initial investment. So let's say this is our stop loss right here. That little blue line. Let's make that a little easier to see. So this blue line right here, that's where we're going to decide I'm going to cut my losses, I'm going to sell my position, and call it a day. Had we not had this stop loss, and had we not sold our position right here, let's see how much money we would have lost. So if we bought at the support and did not sell, at this point, at this dip, this bottoming out, we would have lost 34%, almost 34% of our investment. So if we put in $100 right here, by the time the price got down to here, we would have only had about $70 left, a little under $70 left. So a 34% loss is definitely a big loss to take, especially when we could have avoided it and only lost like 5% of our initial investment. So I really want to stress the importance of this this support level and how you can use it to minimize your losses through risk management, and how you could use it to set a stop loss, which is a huge part of risk management. Because just as much as you want to maximize your wins, you want to minimize your losses. That's a huge part of trading and being a successful trader, especially over a longer period of time. So you never want to enter a position without a stop loss. That's extremely important. And of course, we see that the price did kind of rebound and come back up and then come back down. But as you see here, it still didn't come all the way back up to what our initial investment was, so we still wouldn't have broken even. So definitely stop loss is extremely important, risk management is extremely important, and support and resistance is extremely important for maximizing profits, minimizing losses, understanding buy and sell points. And of course, the more you learn and the further along you get with your trading, you'll be able to see more support and resistance trends within this trend itself. For example, we have right here a support level. And of course, we have another resistance line right here that kind of forms a little wedge. So say we missed our entry right here and it was too late to enter the position at this support. We can still determine another good entry point by drawing a support level within this interval. So the more you practice support and resistance levels, the more you'll understand them, and the more you'll be able to really see these trends within trends and be able to, of course, draw more support and resistance lines and understand the pattern more. So that's all for this video, but of course there's a million other ways and a million other indicators that you can use to determine when you want to exit or enter a position. And we're going to be going over some of those indicators in some future videos, so definitely look out for that.